Hey everybody, my name is Tim Doehrmann. I'm the founder of Eagle Ridge Wealth Advisors, and my job is to make sure that you get the most out of your money in retirement. Today, I'm going to start with part one in a series of videos about what to look out for as far as it relates to taxes in retirement, and then how our tax system works, and then additional complexities eventually in taxes 201 for complexities for retirees. And then some case studies and some stuff that might give you some immediate impact on how to mitigate or limit your lifetime tax liability in and just before retirement. Today, we're going to start with the problem, because in order for us to talk about anything about solutions, we have to know what the problem actually is, right? So let's go ahead and dive in. The problem that we see most of the time with retirees as it relates to them climbing or ascending the proverbial retirement mountain is that they have a large chunk of their nest egg in a pre-tax account. And why wouldn't you? You've been told for the last few decades, right, to put that money in a 401k, just keep putting it away, we're going to match it, yada yada. And so everybody's been putting money away. Well, people get to retirement and they don't realize that they've got this silent partner. You've got this silent partner in Uncle Sam in that retirement account. And now you have to think about, and a lot of times if you're not looking ahead, if you've just been looking traditionally doing it yourself, or you've just been with an investment manager that only looks at investment risk throughout your past, you're not thinking, hey, how do I lay the tax code on top of my retirement income situation and make sure I am paying as low a tax rate as possible? Because often people don't realize all along the way they've been making a tax choice, right? And often people approach retirement and they're thinking, hey, maybe we should be slightly less aggressive with our investments, a little more conservative because we need this to start living on. But rarely do people actually think, hey, you know what? I need to also look at my risk perspective from a IRS perspective too, and a tax code perspective, because it's a code, right? It's not an opinion. And another thing that people often don't realize too is that your tax rate in retirement is often determined more by where your income comes from rather than your income itself. And that's because when you're in the accumulation phase and you're just putting money away, you're putting money into a 401k or an IRA or whatever it might be, you're just putting money, you're just working, earning a paycheck, putting that money away, right? And now that you've got to the summit, to the proverbial peak of the mountain, you got to start coming back down. It's totally different because there's so many different confusing things that can happen in retirement that's going to cause your tax rate to be different. And often it can be a very confusing and complex situation. And that's what we're here to make sure that you are at least aware of what is going on and what to look out for. Certainly in the gap years. The gap years are the years between retirement and required minimum distribution age. There's a ton of planning, tax planning you can do in those tax years. I mean, everybody's situation is a little bit different, but that's what we're here to look at. And again, today, to reiterate one more time, I just wanted to start with the problem. The biggest problem is that most people don't realize they've got that silent partner in Uncle Sam. And not only now do you need to get that money, get Uncle Sam out of that partnership, you also need to think about how are you going to do that in the most tax efficient way possible and limit your lifetime tax liability. And that's a big thing that we do at my firm. So again, I wanted to start today with what the problem is, and there's going to be subsequent videos coming out that are going to talk about taxes 101, taxes 201, and then some immediate impact things for you to look out for, or some things to think about that might help you mitigate that, what we call a retirement tax bomb. That people are often sitting on a retirement tax bomb and they have no idea. Thank you very much, and I'll talk to you soon.